Hey everybody, good to be here today. My name's Brent Moores. I'm sitting in place for Ben Watson, who's out right now, but I am looking forward to talking about the markets with you. It's time for Market Movers, where we can wrap up the end of the week, talk about the week that's passed and the week ahead, and we're going to do all that. The market has been moving quite a bit recently, so we'll take a look at that in just a few minutes. Before I do that, though, I want to welcome each of you. And I also want to welcome Mr. Cameron May, who's helping me on the chat. Cam is not only a good friend of mine, but he also is very knowledgeable on the markets. And so between Cam and myself, we'll do our best to answer your questions. So you guys, we're just glad you're here. You can follow Cam or myself on X at Brent Moore CS, at Cameron May CS. And just remember, the information we go through today is for general informational purposes only. Should not be considered an individual recommendation or personalized investment advice. We'll look at individual stocks today, but those are not recommendations. They're just examples of what we're doing, of what we're looking at here to help us get a better idea of what's happening in the market. The paper money application, which we'll be using, the Thinkorswim desktop application, is provided for educational purposes only. Past performance is no guarantee of future results, and all investing involves risk, including risk of loss. There's no guarantee of an execution of a stop order at or near the stop price. So we're going to talk about what's moving the markets, what moved them this week, and how portfolios can potentially be impacted there. So I'm going to do that, and I want to start off with that. And let me just give you one quick mention of something, and that is we do have workshops that go around the country. Okay, coming up, we have a workshop in Scottsdale, March 7th and 8th. We have an advanced options, that AOS stands for Advanced Options Strategies. That's a workshop that occurs in Chicago, and the 21st and 22nd, and Detroit on April 11th and 12th. These workshops do fill up relatively quickly, so I just want you to be aware of that. And so if they are of interest to you, then go ahead and sign up. How do you sign up, you ask? Well, this is how you sign up. Let me just go to my right screen here, and there we go. Go to schwab.com /coaching, schwab.com /coaching. You'll see in-person events, and you can click there, and you can see these in-person. They're fun. You know what? You could ask Ricebird, who's in here. I saw him at a workshop a few weeks ago in Houston. There's one going on in Seattle right now. In fact, a little bird whispered into my ear and said they may be joining us. So just for a quick view, jump in. And so I want you all to be hospitable. Let's all be welcome guests. So if you do see Seattle, the Seattle workshop, type in the chat here later. Would you all just reach out and give them a big, hearty welcome? That'd be my ask of you. But if you do want to register for one of these workshops around the country, large metropolitan areas, you can always click on them, and then you can register. All right? So enough of that for now. Let's go on, and let me just move that out of the way. And let's head on over to the Thinkorswim platform. This is the S&P 500, folks, and just to kind of orient yourself, I have a 20 and a 50-day moving average on the chart. And what you can do is you can see we have a kind of that candle there. We have the trend has been up. We're above the 20-day and above the 50-day moving average. But sometimes you want to see what's happening on this, because if I zoom in, you can see that candle. That's what we'd call a big kind of bearish engulfing candle is what we'd call that, a bearish engulfing candle. That's not what it looked like for most of the day here. In fact, look what happened here. Let me go to, I'm going to change my time frame on my chart to a 1 day, 1 minute chart. And you can see what happened. And I want to mention a couple events in particular. All right? A couple events in particular. One, yesterday, if you were watching the markets, look at what happened right here. That is when the White House announced there was going to be a 25% tariff on Mexico and goods from Mexico and from China. The market seemed to initially sell off, but then it recovered. Okay. And in fact, we opened up higher today on that. And, I think what happened was this, is a lot of times there's a negotiation that goes on. And you know what? There's Seattle, who just joined us. Mr. Ben Watson is joining us. He's the one who is the main instructor at most of these workshops. And we're grateful. Hello, Seattle. We're glad to have you here. You are all in good hands with Mr. Ben Watson. In fact, you know what? This class that I'm teaching right now is Ben's normal class on Friday. So next week, make sure you join this class. Go to Trader Talks, the Market Movers session on Fridays, 4 o'clock Eastern Time, 1 o'clock Pacific Time. Ben Watson's going to be teaching you all about the market. So we're grateful to have you all here in Seattle. Now, I was just talking about the markets and some of those moves in the markets here. And I just wanted to talk to you a little bit about this. So we saw this, the idea floated of this 25% tariff, and that really took the markets down yesterday there. But let me just kind of give you an analogy on this. I bought a car actually not very long ago, and I went into that car dealership and I sat down, and the salesperson came to me and he said, "Brent, you are so lucky. I cannot believe this deal we're going to give you on that." And it was the start of a negotiation back and forth. And of course, I didn't feel that lucky, to be very honest, because I knew it was just a sales tactic as the start of our negotiation. And I think what a lot of people kind of took from this was, well, we have this 25%, that's just the starting point. Things may change, the market bounced back. Well, what happened here? What happened to the market today as it fell down, the latter part of the day? It was announced that starting tomorrow, February 1st, some of those tariffs are actually going to kick into effect. And the market didn't seem to like that. Whether right or wrong, the market did not seem to react negatively on that news there. And so I don't know what the future of tariffs are going to be and what we're going to see with them. In fact, that's a question. What are the impact of tariffs on this stock market? And the answer is, I don't know. I suspect the answer is we're not going to know immediately, because we don't know what the final trade package is going to look like, the results are going to look like on that. And I would say the market in general doesn't like the prospect of tariffs, but they also sometimes what we initially see up front doesn't actually come to fruition for an extended period of time. So that's what I'm going to say on the SPX. Now, when we look at this XPX and we're looking at this market, I think it's important to consider the S&P 500 compared to maybe some more broader type indexes, because that SPX is dominated by a few just really large companies. You guys have probably heard of the Magnificent Seven or whatnot, but just a few companies really make most of the movement happen in this SPX. But if I go and say, let's compare this SPX to the SPX EW. Do I have that on this list? I do. Here's the SPX EW. Here's the SPX. The SPX EW is the equal weight SPX, where we can see a broader market. So here's just dominated by a few bigger companies, and here's one where all 500 are a little spread out. And you can see the SPX, the one with those big companies, is kind of dominating the broader view of the market. Another way to kind of consider, and this whole concept is what we call market breadth. Breadth is how widespread the ups and downs of the market is. And another way to kind of view this is, what's the percentage of the companies out there on the S&P 500 that are above their 50-day moving average? Well, the markets have come up, because near the beginning of the year, it was down about 20%. That's what this is telling us. The 0.2 would be about 20%. It's now up. It dropped a little bit today, right now, but it's out right about 50% above the 50-day moving average. So those are kind of two easy ways to look at market breadth. SPXEW, or you could use that $ SPXA50R is the percentage of companies above that S&P 500. So let's do this. Let's move on, and let's just kind of look at that NASDAQ here, because what we've had this week, this past week, we've had some huge earnings come out, and a lot of those were companies that really kind of affected the NASDAQ more here. And from a technical standpoint, we did have this, we had some lower highs here on that NASDAQ. We did just get a little bit of a bounce here on this. In fact, you can almost look at this. I don't know, and it's kind of hard to see maybe, but if you can kind of see that, let me try a different color here and see if we get this different color on there. If you can see that a little better. It's a little bit of an inverse head and shoulders. If we break above this level, we would consider that to be, no, that's a big if. I don't know where the market's going to go. In fact, we sold off a little bit, but that would be probably a fairly bullish signal for most technical traders when they look at that. So that's the NASDAQ. I want to look at some individual companies here on that NASDAQ and other companies as well. And because we're in a huge earnings week here, let's just kind of take a quick look at some of these, where to find those earnings, and then we're going to look at some of those individual companies as well here. Here's Market Watch. Go to calendar under Market Watch. I'm going to get rid of that left column there. And I've limited this just to kind of cut down the clutter, so to speak, to the S&P 100 stocks. So make sure you have earnings checked over here. Don't have everything checked probably at any one time, because otherwise you're just going to get a lot of stuff on there. I have earnings checked, S&P 100, and today's the 31st. But this past week, let's look at some of these companies that we've had over the past week. AT&T, General Motors, okay? And you can go on with others. Starbucks is there. Tesla is there. I want to look at that. Microsoft is there. Meta is there. That means we had earnings on all these this week. MasterCard, I want to talk about that. UPS, I want to talk about that. Apple came, there was, let's see, did I miss any? Well, Apple's the main one. Oh, CVX, XOM, that's Chevron and ExxonMobil. Apple came out with earnings. So you can see it was a huge, huge week for earnings this past week. What about coming up next week? March. Now, I have no idea why this is saying December 31st. That is incorrect. You can see the dates here of them coming out. Merck and going down the list, but we have some. Alphabet is hitting next week on earnings. Disney is hitting next week. Amazon is hitting on the 6th, which is, what day is that? That's Wednesday, I think, maybe, next week. Amazon, McDonald's, and so on. So a lot of big names coming out with earnings, and they can potentially affect that market pretty significantly. So let's just take a quick look at some of those earnings, and then I want to talk about some other things going on in the markets. But earnings this week, we had Microsoft. You could see how we reacted to earnings here. Right now, I would say this is probably a pretty key level, because if I were to, say, draw a support here, I'd probably do something kind of like that for a support level, kind of connecting there to there. We hit that low yesterday. In fact, we bounced right off that. Today, we look like we were doing a little better. Again, we're selling off late. We're right down there near, but we haven't broken that. That would be kind of a key level on Microsoft, I would consider, from a technical standpoint, if we were to break that. Now, below that, now we're not in a trend right now, right? This has been kind of going sideways. And you can see that. That's one reason you can use moving averages is, look, if the moving averages are kind of going flat, which these are kind of going flat, then, and the stock's kind of going up and below them, it's just kind of a trendless area right now. But that's kind of a key level I would consider looking at on Microsoft there. Let's look at Meta. That was another company that came out with earnings. I think it was Wednesday, if I'm not mistaken, that they came out with earnings here. Huge run on Meta. What we see on Meta, though, is not in addition to the nice trend that we have, maybe some slowing of momentum. That kind of, it goes to the point of, when we look at things on the market from a technical standpoint, there's trend, there's support and resistance, but there's also other price action that we can look at. When you see bull, nice, strong move up, but then you see two red candles in a row like that, that is showing that momentum is kind of weakening. In fact, another thing you can do, I'm not sure what this is going to show exactly, but I'm assuming what we're going to see if we were to look at something like an RSI. Let's just look at an RSI real quick on here. It hasn't started to dip down yet, but if we start to continue to go flat here, what you're going to see is that RSI kind of roll over just a little bit here. We're in this, what we consider overbought area. Now, overbought does not mean that the stock is going to go down, but it can be kind of a yellow flag maybe for some people, a cautionary note for some people. And the way some traders will do it is they'll say, hey, if it's in that overbought area and then it crosses below there, so in other words, below the 70 line after being above it, that may be kind of a bearish signal. But keep in mind, if you're going bearish on this, it would be counter trend right now because things have been going up. But if you are, let's say you are in Meta, what some traders would do is when they start to see this weakening, they would take that as an opportunity to maybe reconsider some stop levels, even though a stop doesn't guarantee you're going to get out at that particular price, or, just consider that it may pull back a little bit. Another company that had earnings this week was Tesla, another big company here, kind of trending sideways, flirting with that lower level there on this. In fact, what I could do is I could even kind of draw, that's the most recent trend right there on that. Let me just zoom in just a little bit to say oh, never mind. I'm on a 6-month graph. We'll stay on the 6-month graph here. We'll do that. You can see that we've gotten those lower highs there on this. This is going to come to a head at some point. It can't stay below this line and above this line forever because these lines are going to intersect here before too long. If we break above that, that would generally be deemed more bullish. Break below that, it would be deemed more bearish. Some traders can look for that as a potential entry. Now, maybe the biggest company, most anticipated earnings that people were looking at this week was on Apple here. So the interesting thing on this is this. Apple has been underperforming quite significantly this year. In fact, before this move up, about a week ago, I posted on X I can't remember, I think it was the Dow Jones Industrial Average, and of the stocks of the Dow, what was the worst performing company this year to date? And this was about a week ago. And it was Apple is the answer. Well, we've rebounded really strongly here on this. Now today, that's a big bearish engulfing candle right here. And for what it's worth, these, it's a shorter term indicator, but that's not a strong way to head into the weekend. I mean, in general, if you're looking at a particular company and we end near the low of the day, that's not really the strongest way to in the weekend. Although the last few minutes of the day, it did buy up a little bit here. But what happened with Apple? The interesting thing is, on earnings on Apple, it actually, let me do this one day again here. This was where we closed yesterday earnings on the far left side of my page, right there. After hours, we jumped way up. And the interesting thing is this. iPhone sales were actually quite weak. And iPhone sales are their bread and butter. In fact, if you want to quantify that, one way to quantify that is to go to the Analyze tab, go to Fundamentals, Scroll on down the list, scroll down towards the bottom of the page, and you're going to see this area down here. And down here, you're going to see this what drives the stock section. Are you guys familiar with this? Not every stock has this, but bigger companies tend to have this section here. And you can see as a percentage of market cap, and this is from a third party, by the way. So this is a Trefis price estimate it shows and whatnot. That's a third party. It doesn't, it's certainly no guarantee the stock's going to do anything on this. But I think it gives you an idea of what's driving the company. iPhone's 42% of Apple, so to speak, in terms of their market cap right now. That's a lot, by the way. So when you have bad numbers on iPhone sales, you don't expect the stock to react positively. Services around 33%, and then you got all this other stuff on there. So whatever your favorite company is, look at it and see how it breaks down. If it's one of those bigger companies, it can be kind of eye-opening there. But here's my point. On this, iPhone sales missed, yet the company jumped up. Now, it's not up anymore just because the rest of the day it went down, but it opened up significantly higher on higher gross margins and they increased the services area of their firm. Actually, the numbers were better too. So, it's not always straightforward what is good and how the stock's going to react to earnings. In fact, let me mention another company that had earnings this week, and that was UPS. And this was not such a pretty story. You can see UPS from this chart right here. If you actually go to this, and I don't know if it's going to let me, I have that little low bubble there, if it will, oh, come on. Do you see that? It popped up, hopefully it doesn't go away. Earnings, 251 estimate, 275 actual. So in other words, the market was saying, hey, 251 is what we're expecting on this. They came up with, I forgot what the number was, I think 275 on this. And look what the stock did. That was an earnings beat, folks. They beat the estimates on earnings. Why did it drop so much? Well, this goes to show that when you have these companies that come out with earnings, and it's usually a lot more than just the earnings. There's the top line number, there's the bottom line number, but probably more often than not, it's the guidance that comes forward. And what they came out and said, UPS came out and said was, well, look, Amazon, which has been a huge part of our business, of their shipping, that business is winding down and is going to go away eventually. And so going into the future, it's going to be a little bit more of an uphill climb for them. And so that's what is responsible for that. That's a huge drop. And it's just an illustration that the earnings, the bottom line number is not always all it, right? Now, sometimes you're not going to know what the result, what's driving a company up or down. If we look at, for example, let's pull up Chevron. These guys had earnings this morning, and ExxonMobil, and you can see the big drop off on Chevron there. If you want to know why is a company dropping or going up or whatever, pull up the live news gadget on your screen and just make sure you link it, because here we go. We got, I'm linked red 7, doesn't matter what number or color combination you have. But by bringing up my stock over here, it automatically brings up the news over there. And then what you can do is you can just go over here and you can look at the results here. And when you click on, I just clicked on it, and it came up on another screen, so let me bring it over. You can read about the company, and it says, hey, in corporate news, Chevron's Q4 revenue and oil production topped expectations, but earnings missed Wall Street estimates. Okay, ExxonMobil. So even though we're on Chevron, it gave us some information on ExxonMobil. it gives us information on that too. So that's an easy way to tell on these companies that are having earnings, what's driving those earnings. So those were some of the bigger companies this past week that have had earnings. Of course, that's not the whole story, earnings this week. There were a lot of other news stories this week. If we go to the week, and I'm going to zoom in. So today's Friday, Thursday, Wednesday, Tuesday, Monday. Look what happened Monday, okay? Look what happened Monday here. That big drop in the markets this week. Why did it drop? Why did it start off the week so poorly? Well, let's look at NVIDIA here for a sec. Okay, so here's NVIDIA. And there's the drop that occurred on NVIDIA and a lot of other companies, AVGO as well. AVGO, this is Broadcom. Okay, here, get that out of the way. Here's the drop, zoom in again. Here's the drop on Broadcom. Why? Well, this was the DeepSeek information that news that came out. China, which has announced, I mean, really the leaders in AI, you know, nobody has like touched NVIDIA, it seems like, in terms of the AI front. Well, China announced this, what they're calling DeepSeek AI, large language model AI, supposedly, I don't know all the details on it. It's certainly outside my wheelhouse here, but supposedly a much cheaper approach to it than what's currently coming out. And so that threatens companies like NVIDIA and their AI model. If somebody else comes out with NVDA comes out with a AI tool that is possibly cheaper, it's going to be cheaper for companies potentially, and that is more capital efficient for those companies as well. And so we had that drop. NVIDIA didn't really recover that much. They recovered a little bit. They found a bounce. And by the way, when you see something like this, this is a potential support level for the company going forward. What you don't want to see as a technical traders, you don't want to see the break below that level. You want to see that. It can bounce around here all you want, but once we start to break below here, that would be a challenge. That would be a challenge there. Okay. So, there. So Bob said, "Isn't DeepSeek a customer of NVIDIA?" Well, in theory, those NVIDIA chips are banned from China. But the thought is, did they go and have they gone through Singapore and bought them from third party through Singapore to get those chips? So I don't know any details on that, and that's the speculation I've just read on that. But there's going to be competition out there for NVIDIA, and that's what we saw on NVIDIA. Now the market as a whole, which dropped, actually recovered quite well. We saw NVIDIA didn't recover that well. Well, here's the market as a whole dropped significantly, but we fought our way back up to this afternoon's stuff. And Gary's saying not all NVIDIA chips are bad. I think just their high-end ones there. Let's go and let's talk about some other news that we had this week, because we started the week with the DeepSeek info that really knocked the markets down. But another thing that was big news this week was the Fed minutes. Well, first of all, let's look at the interest rate. Let's look at the 10-year rate here. So here's the interest rate on the 10-year. Okay, and you can see, yeah, we were up. This is, by the way, for those of you who aren't aware of this is it's not 45%. You move the decimal point over one, about 4.5% here. It's about 4.5% is the where the current rate is. And you can see it's tailed off a little bit, but there's a lot of uncertainty about the future. There are the two biggest things that tend to drive these longer term rates are, one, potential inflation expectations. Okay, I'm just going to abbreviate inflation expectations. The higher inflation expectations are, the more likely it is for interest rates to stay higher, okay, or go higher if they go up. Today, we came out with the PCE, which is the Fed. They say the Fed's preferred inflation gauge. It's a measure of inflation, and it came in line with what expectations were. But there's still, if your Fed target inflation rate is 2%, we're well above that still. We're like at 2.8, I think. So it's still a little higher than I think most people would like to see. And that's probably not helping the situation. So inflation is one thing that certainly affects these. Another thing that affects these is just economic expectations. Okay, economic expectations of the future. The higher the expectation, then if we have more growth expected, it's more likely that we're going to see we'll see interest rates tend to stay higher, and if growth slows down, then we're going to see lower interest rates. But let's do this. Let's look at the Fed Watch, the CME Fed Watch tool. This is a third-party tool. This is a third-party tool where they use Fed fund futures to try and be predictive of where interest rates are going to be going forward. Well, right now, and the way when you look at this page, you're going to see up here, this is the first thing to look at, is the current target rate, 425 to 450. So for the next meeting, which is March 19th, this is what they're showing. About 82% chance we're at 425 to 450, which is where we're currently at. In other words, about an 82% chance of no change here on this. Okay? About an 18% chance of 25 basis point drop on that. So let's go forward and let me just click here and say, well, what about going forward? What about to May? Let's see, does this change for May? Yes, it does. About 57%, so a little over half percent chance that, according to this, and this is certainly no guarantees, who knows, that the market is going to be, that we're going to keep where we're at, but about 37% chance we get a 25 basis point cut. Let's go out, let's jump forward to the end of the year, December. Now let's kind of interpret these numbers here just a little bit as we do this. So here's where we're currently at, and according to this, there's about a 10% chance we're going to be at where we are. This would be like 1 rate cuts, this would be 2 rate cuts, 3 rate cuts, and then these down here, how would we get to rate cuts that far? Well, this is, especially this is probably that to get that many rate cuts, I suspect would mean that we're probably showing like a recessionary type stuff there in the economy. This would probably not be a good sign for the economy if we saw that 10-year drop that far at that point in terms of what the economic performance is. Okay? So that's enough of that, I think. But that's where you can see, an easy way to see, what kind of market expectations are for these interest rates here. Now, I want to look at other aspects of the market, but while we're on the inflation front, let's hit up some sector info, and I want to click on financials. Financials has been very strong right now. And one of the reasons the financials have been strong, and you can see this, by the way, in a lot of companies such as, I'll come back to financials in a sec. Let's go to Visa, okay? Visa is a financial company. Look what it's done. Now, we had earnings, which helped right here, but that was at the end. It was already a stellar performer before we ever had earnings on Visa, okay? Same thing, MasterCard had earnings this week. Stellar performer, right? Well, one thing that is kind of drives this, and other financials are doing fairly well too. But for this sector as a whole, one thing that really drives it isn't interest rates per se, it's the difference in interest rate between the long end of the curve and the short end of the curve. Okay. If you think about like a bank and money, or an insurance company and money, or these financial companies, they tend to loan out on the kind of the long end of the curve. In other words, people are paying them interest with higher rates for longer periods of time, but they borrow at lower rates, shorter time frame. So if we do here, I'm just going to do /10y minus /2yy. What is this? This is the difference between the 10-year and the 2-year yield. The difference between the 10-year and the 2-year yield, and let me just change my time frame here a little bit. Let's go that. Okay. 10-year to 2-year. For a while, what we had was an inverted yield curve. Down here, you can see that. So here's 0. This would be basically the 10-year and the 2-year have the same rate. Okay, so this would be totally flat at 0. We were actually inverted for, and it goes back, I'm not going to expand back, but we can go back a year before that probably, and see that's kind of a sign of an unhealthy economy typically. Well, we've come to a much more normal curve. Things have been steepening. That yield curve has been steepening. That, I think, has really benefited financial companies out there right now across the board. And that's one reason why when we look at this particular sector, we've seen the performance of that sector because that yield curve has been steepening there, of late. Okay. Let me go and let's look at, let's look at IT. IT, it's been struggling a little bit. Concerns about valuation. Here was the DeepSeek thing we've talked about already. That was the big drop there. But we've been underperforming this year on on IT companies. Whereas communication services, which often, these are both kind of higher beta groups, typically. Here's communications. Often these have gone kind of hand in hand. Not this year. Communications has vastly outperformed IT this year on that. Okay, let me go, and I want to talk. Let me see how much time. We don't have much time, but let's just look at a couple other sectors here, and then I want to talk about the economic week ahead. And I think we already mentioned earnings week ahead. More companies are coming out with earnings here. In terms of other sectors, let's look at utilities here. Utilities has struggled. And by the way, if you want, you can kind of see, you can use like a relative strength. Don't I have a relative strength? There's a relative strength. You can see how utilities has struggled of late. Utilities utility companies tend to have kind of a pretty high debt load. And so higher interest rates tend to hurt utility companies. Also, one reason that investors often target utilities company is their dividends that they pay. Well, if the competitive rate that you can get from, say, a bond, which some people may perceive to be a less risk way of getting income, if that's a better way, more competitive, then it makes less sense to buy utilities companies there. So, and so I think that's one reason we've seen relative strength kind of fade, because for a while it looked like interest rates were just going to go down and down and down, and then we realized it's not quite that easy, and so utility companies have suffered in that regard. Now, coming up this next week, we have a few things, okay? On Tuesday, we have a JOLTS report. That could potentially move the market some. That's the job openings report. Because right now, that's been a factor, employment, labor has been fairly strong in the economy right now. On Monday, we have ISM manufacturing PMI report. That can affect the market. Probably, and Wednesday, we have ISM services PMI report. Those can all affect the market, but probably the biggest thing is coming out next Friday. Next Friday, we have the unemployment rate coming out, average hourly earnings. That's most likely to affect the market there, okay, coming up. So I think I'm at a stopping point. I don't have time to show anything else. Well, we'll just do a couple quick charts here. Let's look at Bitcoin. Okay, here's Bitcoin. Let's see what we got here. Let me just look at a plain chart here. Bitcoin, 102,000. We've seen, for those of you who are interested in crypto, this is not a suggestion for any particular trade on this, but if you want a sense for how cryptocurrency is doing, a lot of people will use that future contract just to kind of see how crypto is doing. And then what some traders will do is they'll look at companies such as, say, Coinbase, for example, as a way to get more crypto exposure if they want, but using a traditional stock there on that. Also, here's gold. There's gold. And in fact, I'm curious to see what today we saw in gold. Gold actually sold off too a little bit here throughout the day, but gold has been right near all-time high. In fact, today we hit that all-time high earlier in the day on gold. That is the, how do you say it? That's kind of, gold is a way of some people use to try and, protect their portfolio, if you will. If you're uncertain about, say, market valuations with stocks, bonds have been a little iffy with the interest rates and the economy. A lot of people are going to gold for a safe haven, and it has certainly outperformed over the past year or so. Actually, probably a couple of years now on that. All right, everybody. I think we're going to call it there. Thank you very much for joining me. Coming up next, there's nothing coming up next. You got the weekend coming ahead for you. So make sure you have a wonderful weekend, everybody. And we'll see you Monday morning. In the meantime, thank you, Cam, for helping me out in the chat. Always appreciate you. Make sure you follow Cam on Twitter at Cameron May CS, at Brent Moores CS. And we'll see you all same time next week. Bye-bye, everybody.